Hello, everybody, and welcome as always to TradeGate Hub's daily market update, morning market update, I should say. Of course, I am your host, Eliman Dambell. And ladies and gents, thank you for taking the time to join the session here this Friday, the 14th of May. And guys, what we are going to be looking at today is quite a lot. I'm sure a lot of you would have seen some of the events which transpired yesterday, especially starting there in the US, Tesla, Elon Musk, and we saw the situation that caused there with Bitcoin. Quite a lot to get through. We saw jobless claims come in as well, lower than expected. I believe it was at a 14-month low. So a lot happened yesterday, and of course, what we are going to be looking at today is to see the impact that these events essentially cause to markets and see where the opportunities could be coming from. In today's trading session. Of course, in today's trading sessions, we also have US retail sales coming out this afternoon. Of course, we have consumer sentiment, the Michigan consumer sentiment report coming out as well. Of course, ECB's MPC meetings minutes is out as well. So quite a lot happening today, quite a lot happening this morning. So we will be going through the vast majority of this. But as always, before we do start the session, I have to somewhat point your attention to the risk warning in relation to the description. So just please make sure you do consume the risk warning. These sessions, as always, aren't here to give you advice or direction as far as where you should potentially buy or sell. It's just to give you an overview again of what is happening in the markets. And as far as what is happening and what did happen yesterday, there's probably no better place to start than Bitcoin. There's probably no better place to start than BTC USD. For those of you looking at the charts, absolutely ridiculous stuff. And essentially what caused this was mainly a tweet from Elon Musk confirming that Tesla will not be accepting Bitcoin in relation to transactions, just due to the fact what was the reason again? It was due to the fact he believed Bitcoin mining essentially was too energy consuming, and he essentially wanted to move away from this. So until he says that it becomes more energy proficient, Tesla will not be accepting. Of course, Tesla, an EV manufacturer, an electric vehicle manufacturer, trying to do its part, I don't know, for the climate and whatever else, trying to move away from accepting Bitcoin transactions. And essentially, we saw what this meant for the price of the cryptocurrency. And let's put it this way: from a technical perspective, it was pretty clear. Support and resistance broke out of the floor of 54,954. So we saw the sell-off essentially taking place there. And guys, to a degree, this is what I always say, and I said this yesterday. Remember, we said, not me, not Mike V, not Dale, not Ben Maldivano, who was attending it. Not a single analyst on this platform, not a single analyst across the world could have told you Elon Musk was going to tweet what he tweeted. Not a single one of us would have been able to say this to you. But what we could have potentially been able to say to you is, okay, historically, we saw a lot of bearish action take place at that level before. We saw it damn near 2 weeks ago. Look at that bearish streak which took place there towards the end of April. We've historically seen a lot of bears just below that floor. We clearly saw that that was a level of support. Bringing up the RSI, and I apologies, it seems like I butchered Ben's surname there. So apologies, hopefully he's still listening to this. But just to quickly bring up the RSI, just to give you some perspective. Looking at where the markets were trading prior to that drop as well, looking at the RSI, you could see it was trading again at that floor of 40 in relation to the RSI 39.40, and again there was that ability for it to go low. We saw it could potentially fall to the wayside, and that's essentially what did happen. So even though we may not have been able to tell you what Elon Musk was going to tweet and how it would impact the markets, just doing the analysis, looking at the charts, looking at the candlesticks, could have potentially prepared you for a sell-off below that level. And for those of you who were prepared, look, you see some opportunities there as well, that one there, and of course yesterday's. And yesterday we saw the markets pretty much drop almost $10,000, probably just over $10,000 in the space of a few hours, and great move, just an absolute. And for me, guys, and this is how I always put it. For us, we couldn't care less if the market goes up or down. From your own perspective, all you care about is being in the right direction when it does increase, in the right direction if it does decrease. And for those of you, or those of us, of course, in popular culture, when you're looking at the news and I don't know, the postman essentially telling you about crypto, they mainly, from the average individual, they usually tell you about Bitcoin and the opportunities in Bitcoin when the price is increasing. But for those of us trading, for those of us speculating on the price movement, that's essentially what we're doing. We're not holding, we're not investing, we're not geared to the price going up. We see the opportunities in the rise and in the fall. So if it is, I don't know, falling like a ton of bricks, it's the same way we can profit as if it is essentially rising to the moon. So that fall yesterday, 10K fall, of course, since then we saw that floor start to take shape. You could see it was a false breakout in the end. That floor in the RSI as well, it went to as low as 20. We saw the bounce come back. Now the markets are somewhere at 36. So it's still relatively oversold, which does lead me to believe there are some bulls. Let's just have absolutely no doubt about this. There definitely are some bulls waiting in the wings here. Looking at where we have that resistance, I don't know, 57.57, you can see above that level there are some streaks of buying which have taken place. Some uncertainty as well, but if you look historically as well, going back there to March, we had that there in April. Could we see something similar in May? So could we see 3 months in a row of buying at that level? And let me just kind of paint this picture a bit clearer. Where are we? See, you have that there in yellow. What that you have? That's the first point there. You have that second run there. To zoom out so we have the full picture, and even if we go further back, you can see some more runs there, but just in the last 2 months, I should say, and the question is, will we see it for a third month potentially take place somewhere around there? I think that's the question mark. Now a lot of us will be asking ourselves, will we see another bull run above that area of 50, taking us towards 54? So definitely want to consider looking at the shorter term time frame for today, the H1. We are seeing quite a lot of and guys, it's normal after a move. Pardon me, if unlike yesterday, I have had my porridge today, but unfortunately it hasn't digested. So we did start the session better than usual, but I'm struggling to contain the food that I've just digested. But going back onto the charts and digesting the information in front of us, what we can see clearly is, and we said it, whether it goes up or down, at some point you are going to get that consolidation. We are getting that consolidation now. It's been happening between 47 and 50K respectively. Looking at the RSI to where it is now as well. The last time we saw this there in the beginning of the week, Tuesday, we saw consolidation at that area as well, or that area acting as a resistance. So we have had some signs of this particular point, 50-53, acting as a resistance in the past. We see the price essentially struggling to move out of that territory. And just to quickly bring up the actually, let me just go back to my actual chart there so we can look at the moving averages as well. Now, of course, we've just seen the analysis on the other chart, but just quickly looking at the moving averages, what's interesting here is on the H1, we're just looking at an upwards crossover literally has just taken place. Even now, look at the candlestick, this latest candlestick, you can see it's green. But guys, look, there's a lot of uncertainty in that area. Me personally, just speaking for me personally as an individual, this is an area I'd probably like to avoid. It just looks absolutely messy. Even if you buy, it's very, very limited as far as the scope. Long term, absolutely, it is positioned to go up, especially if you're looking at that moving average crossover maturing, because it's just taken place. So you would assume that there is still a lot of life left in this as far as the momentum continuing and maturing. But I guess, and I do believe it is dependent on what happened with this RSI level. Speaking of the RSI, when we started talking, it was around 49, 50. Now you can see it's heading into the 50s, 52s, and so on and so forth. So it's an interesting one to pay attention to. Bitcoin, let's see what Elon Musk is going to tweet next. And I believe sometime late last night he did tweet that he does still fundamentally believe in cryptocurrencies. He just doesn't believe in the high use of. But guys, you would assume this was already known. I don't know, the conspiracy theorist in me, and this is a morning update on a conspiracy session. But the conspiracy theorist in me does ask the question, why someone you would assume he had this information 5 months ago. You would assume in January when Tesla invested $1.5 billion into Bitcoin, you would assume this information was absolutely available to him at that stage. But what that leads me to next is Ethereum, which we haven't looked at so far this week. But the reason I quickly want to look at Ethereum is in the tweet, essentially, Musk also said that they are looking at alternative cryptos, which could be less energy consuming. I'm not sure if Ethereum itself, again, pardon me, I'm not sure if Ethereum itself falls into this category, Dogecoin or whatever it could be. But what we are seeing and what we have been seeing in the last few weeks, where Bitcoin was somewhat consolidating and not necessarily testing new highs, Ethereum just essentially kept breaking new highs over that same period. So you could see firstly it crossing over that 3K mark, then it crossing over the 4K mark, and some people were even saying 5K. And this was all happening in a time. You can just see those gaps. Let me just, you see that gap there, the market gapping out, market gapping up again. And of course, since that latest gap to 4K, it's just started to consolidate. But if you look at Bitcoin at that same period, Bitcoin was essentially flat. So a lot of people were essentially saying exactly. So look at Bitcoin in that same period, especially around there. And if we go back to Ethereum, you can just see we have more of an ascending triangle taking place. So a lot of people were saying, actually not a lot of people, I was saying that I believe the reason behind the rise of I don't know, let's say Ethereum over the last few weeks could potentially be down to Elon Musk, Tesla, and those parties involved essentially seeing opportunities elsewhere and potentially even driving the price up of Ether. But guys, that's enough for the crypto talk. We don't really look at it too much. I wanted to start off the session with, especially after such a great move yesterday, and congratulations to anyone who was involved, and my condolences to anyone who was absolutely left holding the baby. I'm not sure if that's politically correct, so apologies if not. But guys, moving forward to the SPX, as always, we do need to look at the SPX. And yesterday, what we saw, jobless claims. Now, pre-March 2020, probably no one, pardon my language, I gave a damn about jobless claims. Let's just call it what it is. No one in the markets typically would have been looking at jobless claims as a key economic indicator. But what we have been seeing in the last year, and of course, as the pandemic and as the outbreak was continuing, what we did notice was jobless claims was giving us real-time information on a weekly basis, at least, of how the US economy was faring, how many people were unemployed, how many people were claiming jobless benefits. We saw this at one stage, I believe, go up to, don't call me, I could be wrong. I probably am wrong. I have the figure 20 million in my head. I'm not sure if that was, I have the figure 20 million in my head, or 2 million. 2 million, I've 20 million. 2 million. I believe the record was around 2 million, if not 6 million. 6 million, actually. It was 6 million. People in 1 week claimed unemployment benefit 20 million. Sorry, I just can't get that out of my head. That would have been an absolutely bearish week. But 6 million people claimed unemployment benefits at one particular week, and now what we're seeing, it's below 400,000. So we are seeing jobless claims decline or decrease, and this does, of course, bode well for the U.S. economy. Even though we had 2 weeks ago non-farm payrolls falling extremely short of expectations, as we touched on earlier on in the week. But in relation to jobless claims, the reason that we are seeing somewhat, and guys, if you remember yesterday, not to say we said it was going to happen, but we said it was going to happen. We said we would likely, and this is the same chart that we looked at yesterday, anticipating that bounce. We saw what happened historically there, and we said, could we see, when the US opened, could we see further rises and rallies there? And of course, we have. If you remember, one of the only areas of concern in which we did have was the moving averages, because it did look like it was crossing over downwards. But the RSI was oversold. We saw the market at a floor, and those two indications did essentially trump the third, giving us essentially what we saw happen yesterday. And this candlestick now, again, futures, this is a futures chart, so it will be interesting to see what happens when the actual US session opens later on this afternoon. Of course, again, Michigan consumer sentiment report, retail sales, and of course, if you are familiar with the US, we know retail sales contribute to 2/3 of GDP, 2/3 of US economic growth does come from retail sales. So that data later on is going to be absolutely key. If it does come in stronger than expected, it'll be very interesting. It'll be very interesting to see what the impacts are on the S&P and other US indices. You would assume they will be relatively bullish. But guys, moving forward, and somewhat sticking with that retail sales theme, looking at gold, H1 candlestick there, 1 hour time frame. Because we do know the correlation. We do see the correlation. But let's actually have a look. Did we see that correlation? And this is the thing, guys, because I remember last year, there was a point, I forgot the time of year, but there was a point where gold was just absolutely, actually, I do remember the time. This was after the initial sell-off of indices, I believe in March and April. Then we saw indices start to climb again. Gold was heading to the moon, hitting its now all-time high of $2,075, I believe. And gold was going up, the S&P was going up simultaneously. Usually what we have is, if the S&P is going up, meaning the US economy is performing well, typically we see gold prices essentially and gold valuations decline. Unfortunately, last year that wasn't the case. So sometimes you don't see that correlation, but traditionally what we do know is the better the US economy is, the stronger and more certain the future and the present of the US economy, we do see gold weakness, because of course investors who flock to safe havens like gold look for shelter. You don't look for shelter, you don't carry, some people do carry an umbrella in the sunshine, but I'm sure for a lot of us who are able, you will try and get somewhat of a tan as well. So for those of us looking for tans, maybe I'm not one of them, for those of us looking for tans, we tend not to require umbrellas and tend to embrace the shade, the sun. And I believe, as far as gold, just using this analogy to say, when we do have, I don't know, doom and gloom is traditionally when we see the price of gold go up. And last week, of course, was incredibly doomy and gloomy, just due to the fact that NFP numbers, non-farm payroll numbers, came in less than expected. So if that theme is, I don't know, somewhat repeated a week on, this time with retail sales. Absolutely, you are going to have some balls waiting in the wings. And guys, if you are looking at this, you do see absolutely there is quite a lot of upward trajectory there, upward trajectory there, upward trajectory there. Moving averages as well. The momentum could still potentially continue, especially looking at that 10 EMA there. Could it continue upwards further? Maybe not all the way to 1959, but if you're looking at somewhere, even let's say 1880 today, look at that candlestick right there. Look at that one. Look at this. Look at this. So you do have quite a few signs. Look at just that would be a $40 move if that were to take place. So it would have to be a very, very dismal retail sales number to lead to that happening. But if we look at a H1 just to have a more real-time view of what could potentially happen here. Now, for me, on a H1 on a 1 hour, it does look a bit overbought. It does look overbought. We know 70 is where it is. 64 is where the resistance is, I beg your pardon. We're currently around 64, looking at the chart as well. Yeah, you see, we do see more. Look at the red we've seen here. Look at those bears. And the bull has already taken place. The bullish candlestick taking us to that 1636, 1640 level has already taken place. And now we're seeing in the last few hours, the uncertainty start to creep in. Let's look at a H4. So guys, what I always try and say as well, sometimes you want to try and find your opportunity by looking at different time frames. What you may see in a daily could be different to what you see in a 30-minute time frame or a monthly time frame or weekly. So always try and gauge where the opportunity could come from. And sometimes even if you're, for me, for example, I usually look at the daily. But before executing a trade, I like to see what's happening in the shorter term time frames before getting involved. So with this, unless we see a dead cat bounce in relation to the RSI, of course, we've seen it drop. If it rallies straight back towards 70, then I could see this making a run for 80 and 80. If not, I believe retail sales numbers may come in better than expected, and you may see this even start to tank, going back towards, I don't know, 1790, for example. So that's definitely one thing to consider if you are looking at gold today. What else? Crude oil. This is going to be probably the quickest chart we've ever gone through, because since yesterday, we have seen markets start to. We had that sell-off which took place yesterday, of course, and since then we have just seen price. And guys, we said it. We said this is trading in ranges, and that's exactly what we're going to see take place here again. You probably have already seen the bounce. We've seen that bounce take place there once, and of course twice before. You could essentially say this is the third time. Well, the moving averages, though, that red is really pointing downwards, but the only thing that looks like it's containing it there is the RSI, which of course has turned and has rebounded and now looks like it is facing upwards, currently at 40. Could it make a run potentially for 45, 50, or to the next resistance, which is 50? So could we see this attempting to make a run towards 50? Question mark. And that's crude oil. We've been 20 minutes and we still haven't looked at Forex. So what I'm going to do, guys, I'm just going to finish the session now, looking at probably 2 or 3 Forex charts if we have time. Starting off with cable. Yesterday, the last few days, of course, we saw that resistance held, that 2.5-month high for the cable rate essentially held at 14166, and since then we have seen prices decline. But in its decline, we haven't really seen a complete sell-off like we saw in the past. And guys, what I will say, sometimes these sell-offs come in increments. So we may have already seen that phase 1 of the sell-off, and potentially we could be looking at phase 2 below 139. At the moment, it's still somewhat I don't know, alive and kicking, remaining in the game. After that sell-off, we had that doji, that reversal doji, showing us some potential of a rebound, and that rebound has taken place so far today. Looking at the H1, looking at the 1 hour time frame, again, sell-off, consolidation, and if you're looking at that consolidation, it's essentially just support and resistance. Support and resistance there. You could even just bring that somewhere around there, and you could just consider those false breakouts. So support and resistance. So now we're at resistance. We're at resistance again. So what are we going to say? Resistance there at 147.2. Resistance here at 60 as well. Moving average crossover, yes, but history tells us that the momentum may be I don't know, the upwards momentum may be put on hold as far as potentially rising due to the fact that there are some bears somewhat potentially going to safety check this this level there and may bring it back down. And you can see already that candlestick, when it did attempt to break out, it did move. That doji did show us some reversal signs already. So a lot of uncertainty at that level there. So there's two ways I'm sure a lot of you will be looking at this. Of course, you may have some of you bullish, hoping for it to continue upwards back towards those 141 levels, or you may have some bears in the room, just essentially looking at the last 3 times that the markets were trading at that level and essentially hoping for a sell-off. So that's cable. Let's look at dollar yen. We haven't looked at dollar yen as well this week. So let's just take a look at USDJPY. Oh, this was a chart. This was a chart I remember, and I'm so glad because I remember, when was this? At the beginning of the year, it was trading at around 103. And same chart I was using all year, and I believed at the time there was going to be a sell just around there. So I had like a pending order, and it just missed my pending order. Thankfully for me, otherwise that would have been a hell of a loss if I were to incur it. But since then, thankfully missing that, and sometimes just pretty much do the opposite to what I say, right? Sometimes, but sometimes you can see how badly wrong you can get it. But we see since then, again, this was probably more dollar strength. We saw a lot of dollar strength pushing the yen backwards quite a bit at the beginning of the year. Now we are seeing some consolidation, and that fall coming in the last few weeks, of course, when we saw, I don't know, the US economy start to somewhat stagnate as far as the jobs growth and things of that nature. But we are seeing it consolidate. And again, really and truly, after such a move, you have to expect, it's not even you have to expect consolidation. Look at how long the market's consolidated within this period before eventually breaking out. So you can't just expect a breakout I don't know, by such a huge margin and expect an automatic bat. Sometimes that does happen, but again, just being realistic, we do need to anticipate and expect that there is going to be some type of consolidation, and that's what we do see happening so far. But in the shorter term time frames, I'm sure you will be able to find more volatility in this. Again, paying attention to that RSI. Where are we there? 34, 31 is what we have as the floor. So potentially, could we be heading towards that 31 level? If that does happen, you're probably looking at a forced breakout there, or even just not even a forced breakout. This could be the floor. If you look at the last floor, you're probably looking at it trying to head to 109.19. And if that does happen, yeah, there have been some small buys which have taken place there before. So you may even have some traders, I don't know, executing a buy limit order, buying below the current price, having some pending orders already waiting at that level, believing as soon as it does hit that level, and we have seen it a few times with some of the charts that we've looked at, as soon as it hits that lower price is automatically going to rally. As soon as it hits that lower price is automatically going to rally. Will we see the same happen there again? Question mark, question mark. We will wait and see. But guys, it's been a great week, all great 3 days. We started here on Wednesday with these morning market updates, and I hope it does bring some value to your mornings and help you see some charts and some opportunities that you haven't been considering. So we are, I don't know, for the next week at least, going to be continuing on a weekly basis, but we may be moving onto a Monday, Wednesday, Friday rota thereafter. But guys, it's been an absolutely great week. Hope Friday is productive for you. And again, look forward to having Mike V on later on this afternoon. Of course, Dale's going to be on as well. So any issues, any questions in which you may have in relation to the charts that we've looked at today, absolutely feel free to bring it up with the team, or just post some of your own ideas on the chat forum. So guys, all the best. Enjoy your weekend. See you on Monday. Take care. Bye-bye.